I used to think that investing was this complicated thing that only rich people understood. Turns out I didn't need to be smart, I just had to stop doing a lot of dumb stuff. So these are 10 things that I wish someone told me before I put $1 into the stock market. I believe that this video can change the way you see investing and help you make smarter decisions. Number 1, the stock market is the economy 6 months ahead. If you think about the stock market, it is a forward prediction of everything. To value a company, you're not just going to look at the numbers that they're putting up right now. You're going to look at the potential earnings a company can make throughout the years. When things start to look bad, like layoffs, inflation, bad news everywhere, that's usually when the market starts recovering. And when everything feels great, the market usually tops out. If you wait for the economy to feel safe, you're probably buying very late in the game. The stock market doesn't care about how investors feel, it cares about what the future looks like for all of these companies. Number 2, time in the market beats timing the market. When I first started, I would wait for the perfect time, once I had enough money, once there was a dip, but the cost of waiting is higher than you think. The stock market goes up and down consistently, but eventually you will run out of time. If I had started when I wanted to, I would be thousands ahead today. No one's ever predicted the stock market, so it's best to just stay in at all the times. If you just held during 2020 when we had that whole COVID era, you would have made a lot more money. But if you stayed on the sidelines and waited for everything to look good again, well, the market rallied 70% from there. So you missed out on a 70% gain. Number 3 is that volatility is normal. It is not a sign to panic. When I first saw my stocks go in the red, I panicked and I thought some terrible news came out, but that's really just how the stock market works. Stocks go up and down repeatedly, and you just have to embrace the volatility. If you hold on, you win, but if you start freaking out, then chances are you're going to make a bad decision, and next thing you know, the market's already ripped higher after you sold. So if you're investing, you don't want to take that money out in a month or even 6 months. You want to let that money sit there for a while, so you shouldn't be concerned about the short-term price movements. That leads me into number 4, which is that you are more dangerous than the stock market. The biggest threat to your portfolio isn't a recession, it isn't a black swan event in the stock market, it's not another geopolitical problem, it is you, it's your behavior, it's how you react when you make and lose money. Going back to the volatility, it is how you make certain decisions when you see your money going down 20% or going up 20%. When you invest, you should have a boring plan. A boring plan is one that stays constant and does not change. For example, if you are consistently investing, no matter what the prices are at, as long as you're buying every week, no matter what's going on in the economy, no matter if we're in a recession, no matter if we're in a bull market, as long as you consistently keep buying and you stay disciplined, then you should be a pretty good investor. Number 5 is that you'll never know enough. Before I got started, I kept watching a whole bunch of YouTube videos on how to get started, or trying to figure out what all these terms meant, or trying to save up a certain amount of money. But the best thing you can do is just start. You want to start and then learn from there as you progress. That way you can get used to the volatility in the stock market of having your money go up and down constantly. You can start small, and as you progress and keep investing, then your confidence will grow and you'll start to become a better investor. Investing always has risk, and if you've never invested before, then obviously it's going to seem risky. The idea of putting the money you earned into something that you can't control is a scary thing for a lot of people. That's why you want to start small, and then once you see that start to work and you start to develop the right habits, then you can increase your contributions and you can become a more confident investor. Number 6 is that wealth doesn't come from hitting home runs. It comes from stacking boring wins over and over. You might spend your day chasing the newest trend or trying a whole bunch of different things, like crypto or day trading or Bitcoin or the next hot stock. A lot of people will waste years trying to chase fast money, but the people who are patient are the ones who pass everyone. Warren Buffett has a famous quote, "The stock market is a device for transferring money from the impatient to the patient." Your investing will most likely seem slow at first, but as you progress and as compound interest does its thing, you will start to see the momentum carry on in your portfolio. Number 7 is that most people confuse investing with gambling. The reason why is because they're trying to chase the next hot stock or the next trendy thing right now, or what has the most momentum. The only reason that they are buying it is because it's going up. Real investing is intentional. At least for myself, I try to invest at least once a week, every single time, no matter what the prices are. That's dollar cost averaging, just buying no matter what the prices are on a consistent basis. So investors want to look to buy great companies that have great long-term growth potential and that look undervalued today in today's market, and letting your money grow without touching it every 5 minutes. When you hit the buy button, you are a part owner of a company. So you have to think like an owner of that company based on what you see management doing now and what the future looks like for the company. Do you think it's a good buy? But if you're just trying to chase what's trending right now, then that doesn't make any sense. Number 8 is that nobody cares about your money like you do. No one is going to retire you. It is up to you and the financial decisions that you make right now that determine your financial future. Do your own thinking. Look at the situation that you are in right now. Based on what you're doing, if you continue that in 10 years, will you be in a much better financial position? Or would it be the opposite? The biggest things that will make your portfolio grow the fastest is if you're able to increase your time horizon, you're able to increase your contributions, and you're able to increase your rate of return. Those 3 things are what determines all of your success in investing. So focus on those 3 and try to figure out ways to expand all 3 of those. Number 9 is that Wall Street has no idea what they are doing. A lot of these hedge funds are managing millions of dollars of their clients' wealth. The issue is that their game is to try to seem smart to their clients. That way they will give them that money. They make their money from the fees and the commissions that they charge for their clients' money. I'm not saying to completely ignore what they have to say, but I am saying that their priority is keeping their clients' money. Usually they underperform the stock market, so they have to play catch up, and this would mean that they buy into higher valuation names that have higher PE ratios, which means that they're actually putting their money in more risky places. If they lose, they still get paid, but if they win, they get paid even more. But you are investing for your actual future. Your strategy has to be built for you, not a fund manager that's trying to catch up to the stock market. Number 10 is that the goal isn't to get rich, it's to stay free. People have this thought that investing is all about getting rich. To some degree, it of course is. But you want to look at it as you're investing so you're not stuck in a job that you hate, you're not having to worry about paying bills on time, and you're able to do the things you want to do when you want to do them. When you start thinking like that, you're naturally going to start making better investing decisions. I'm not a millionaire, I'm just a normal person who is trying to grow his net worth as an investor. If you found this valuable, consider subscribing. Have a good day.